Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday, August 5th. I'll tell you, one of the stories that I've been looking at all week really is gold. Gold just hit an all-time high of 2502, 2,500 an ounce. It crossed 2,500 an ounce, and that is by far the biggest price that it ever has been. I mean, even in 2022, it was 1750. I'm looking here at a chart. In 2018, it was 1250. Wow. It's literally more than doubled in the past 6-7 years. Geez. And most of that gain, 25% so far, has come this year. So it's really been moving, kind of crazy. And that kind of matches one of the big themes for us. We're in a tale of two markets kind of situation. On the one hand, you've been watching the market go up a lot this year, which has been great for us, and we've taken a lot of profits. On the other hand, when you look underneath the market, underneath the surface of things, it's more like kind of like the movie Jaws, dun 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 dun. There's a bunch of Jaws kind of scenarios here that are really coming at us, and most recently is the economic weakness. And this is why professional investors have been selling off so many stocks in July. I mean, they've just been selling off stocks left and right. They haven't sold this intensely in 2 years. So basically what you're seeing happen underneath the surface is, pros really unwinding massive long positions, taking profits basically after this huge bull run that we've had this year, which is wise. The story has changed. The story was first in the beginning of the year, the Fed's going to cut rates, and they thought they'd cut rates 3 times at least this year, and that hasn't happened. But, we've gotten closer to that, and the market has just marched up basically in expectation of that. Now we're right around this area where now the story is starting to change. Okay, everyone accepts the Fed's going to cut probably a quarter point, maybe an emergency half a point if the economy keeps showing this kind of weakness. And now the question, we start to move and the attention focuses on the presidential election and other things and the economic weakness. But for my money, I am glad that we've sold so many stocks so far this year. We've taken some great profits. Being early as an investor has advantages and disadvantages. It's kind of like back in the 90s when I worked on Wall Street, sometimes we'd go to these clubs in New York City. Investing is kind of the same way. When it comes to investing, the smartest people always get into a place early and first, and they always leave early and first while everybody else is still entering. And I think that with the adjustments that we've made in the past 30 days, that we were early on the bull side of it 6-8 months ago. We've had a great run, and that we're early on the leaving the party side of it also, which we will see if that turns out to be true. But, this is a market, like I said, where it's a tale of two markets. You have a lot of bull forces, even though right now at this stage of the market, we moved up. Now we're kind of sliding around here. And now there's this kind of war going on between bulls and bears for control of this narrative. And you can count me, as I've said before, skeptical on how this all plays out. Anyway, just a short recording for you today. I hope you have a wonderful Monday.